Explain this to me. We got a risk-on rally, and crude is not participating.
Yeah, crude's kind of off on its own, isn't it, Alex? I mean, when you're looking at crude, it's really become, to steal something from the Fed, a bit data dependent. Crude oil, to me, is at what I call equilibrium with a net. When you look at the oversupply we had in 2015, some estimates had it at about 2.1 million barrels a day of oversupply. That's a glut. And now we've cut back quite a bit on that. Demand has increased. You've had supply disruptions in Nigeria, supply disruptions ongoing right now in Venezuela, and a little bit of that offset by Iran, but my estimates are we're more about 700,000. Given the turmoil in the oil-producing nations and just the regular supply and demand fluctuations, $48 does nothing for me. This is the midpoint of a new range.
So what kind of downside do you think we'll see here?
I think in the short term, you can see $46 pretty easily. You might break through that a little bit, but that's a pretty good long to take. I do expect to see $55 this year. We're talking about a situation where global demand continues to fall, with obviously North America leading that. We don't see that turning around soon with a massive reduction in CapEx. That's not going to flip overnight, even with the talk of them turning wells on, which is just not that simple, that you don't turn them on like you turn on a faucet. So I think the oversupply is going to continue to shrink through the summer at least.
All right, 10 seconds. What's your upside if we get more supply disruptions?
$55 is where we're going to see people starting to take short positions. So it's actually $54.90, but you got to reach up to that even number when you get there.